A very good morning to all of you and welcome to another session of decision making classes. So in the last class we learnt about decision making in different types of environment. This was the last thing that we learned, decision making in environment of uncertainty, risk and certainty, right? These are the various decision makings in different types of environment. This was the last topic or last part that we learned. So today we would be starting with various models of decision making process. So the first model, so there are four types of decision making models which will help us understand how various decisions are taken or how it should be taken, right? So this four primary econologic model, which has been given by Harrison, then the bounded rationality model or administrative man model, which is a very famous decision making model which has been given by Simon. Then we have the implicit favorite model or the gamesman model, and at last we have the garbage can model. Okay, so these are primarily the four types of decision making model, and we are going to see what this specific decision making model means one by one. Okay. So the first is econologic model or rational decision making model. So this model of decision making says that the manager or any individual for that matter who is taking decision is making a completely rational decision. He is completely aware of all the possible alternatives that could be used as a solution to the problem that has been identified, and at the same time the manager is also aware of all the outcomes, all the possible outcomes of the alternatives that are existing. And since the manager or the individual is already aware of all the alternatives that are possible, then all the pros and cons or outcomes of the various alternatives, then it becomes very easy for the manager to choose the alternative which is going to give us the optimal result. And that is exactly how the rational decision making model or econological making model believes that the individual or managers, they make the most rational decision because they have access to all the necessary information that is required to take the decision. And at the same time, the model, it also suggests that the decision making process, it follows a completely strict order, a completely structured strict order. That is something we have already discussed, right? But usually in decision making process, in other models we are going to see that this order of decision making process or steps, they are not always followed in the same way. But this model of rational decision making model says that these steps are followed orderly. Like first the problem is identified, right? First of all the problem is identified, then the various criteria to evaluate the alternatives are generated, then the various alternatives are generated, then they are evaluated on the basis of what would be their prospect, what would be the result or outcome of the alternative, then the best alternative of it is chosen and it is put into task or put into work. This is what we mean by the rational decision making model. Then next we will go to the bounded rationality model or administrative man model, and this model of decision making process was given by Simon, and it is in complete contradiction of the rationality or rational decision making model. Here Simon says that unlike the rational decision making model, he believes that the man or the individual or manager does not take a completely rational decision, rather they take suboptimal. They do not choose the completely optimal alternative to this problem that they have identified, rather they take a suboptimal decision, and why this happens? It is because of various constraints that might be present in the organization or even with respect to the individual, which we are going to see here. So because of what reasons Simon feels that the individual or manager is not able to make the most rational or the most optimal decision? It is because of easy alternatives and solutions. Usually whenever decision making process happens, these are certain assumptions, okay, assumptions of the bounded rationality model or administrative man model. So here you can see that easy alternatives and solutions, usually whatever solutions are there present at our hand, easily available to us, they are usually chosen. And when this easy alternatives and solutions are chosen, we do not take into account all the other alternatives that could exist and that could even be a better solution, right? So instead we go for easy and alternative solutions. Then managers, they do not have access to all the information. Unlike the assumption of rational decision making model, usually the manager or any individual taking the decisions, they do not have access to all the information that is required. In some or the other way, the information is limited. Then the manager, they are also not aware the various alternatives. They might, first of all, they are not aware of all the alternatives that are existing, and then second, they cannot properly or completely predict what will be the outcomes of the alternatives that are existing. Then the organizational goals also, they might be a constraint in the decision making process, and at the same time the goals of various stakeholders. There are various stakeholders to any sort of organization. It is the owner, then we have the manager, then we have the customers, then we have the buyers, sellers, all of this. There are various stakeholders and all of them have their own goals. They all have their own type of expectation from the company. So there might also be a clash between them, which might lead to a suboptimal decision. Then is the sequential attention to alternative solutions. So what does this mean? So let us say that a problem has been identified, okay, a problem has been identified, and now the decision making process is going on. So what will happen here is, let us say the first solution that was identified for the problem was A. So here all the pros and cons of it would be listed, and the company or the manager realized that this is not the best solution that could happen. Then we'll see, go to B, the next solution. Then also the manager realized that this is not the most optimal or best decision that could be used. Then it goes to C, and it realized that C is a good enough solution, may not be the best solution, but it is the good enough solution and it could be utilized to solve the problem that has been identified. And here the company would go with the solution or the alternative of C instead of looking for more alternatives. There might be more alternatives that are present which are more optimal decisions that could be taken, but in this sequence, once the solution or the alternative which is good enough is found out, then the process of decision making stops there. And they stop looking for more alternatives. Okay, this is what we mean by sequential attention to alternative solutions. When a good enough, not necessarily the best, but when a good enough solution is found out, then the process of decision making or search for the alternative is discontinued. Then is the use of heuristics. A question regarding heuristics has already been asked in the examination, right? And what do we mean by heuristics? It is usually based on the past experience of the manager. For example, you can say that, let us say a company, it has been consistently hiring over last 5, 10 or 20 years. It has been hiring for its managerial position. It has been hiring from some business school, right? So on the basis, and whatever managers are being hired or students are being hired from this college, they are also showing very good result in terms of their work in the organization. So on the basis of this positive past experience that they are having, they are going to continue hiring for their managerial position from this college. So it is on the basis of their past experience that they are taking the future decisions, on the past experience taking future decisions. Then we have satisfaction. So what does this mean? What do we mean by satisfaction? So usually the human mind is limited. We cannot process a lot of information at one time. So whenever a problem comes at hand, and we have a complete overload, of a lot of information, what the manager or individual usually does is they cut out the information. Okay, so they cut out the information and they reduce it to a manageable portion of information which they can easily process, and on the basis of this manageable portion of information only the decision is taken, right? So you can understand, since all the information that was existing, since it made the process of decision making very complex, what the manager did is he or she cut out the information so that it becomes a manageable portion of information which can be easily processed by the manager to take the decision. So here all the information is not accounted for, and that is exactly the most optimal or rational decision is not taken, right? And this is also known as satisficing model. Okay, this decision making model is also known as satisficing decision making model, because here not the most rational decision is taken, but a satisfactory suboptimal decision is taken. Okay, then we have the retrospective decision making model. Retrospective, it has various names: retrospective, implicit favorite, and gamesman model. Okay, and here what it means, this decision making model, it concentrates on how decision makers make an effort to justify their options after they have been made and try to justify their opinions. Okay, so here let us take an example to understand this. Okay, so let us say that a company is hiring, a company has an open position A, and for that it is hiring, it is conducting a recruitment process, and it is choosing who would be the best candidate who would fit for the hiring of or filling up the position of A, and it has listed or it has already screened many candidates, and when it is screening many candidates during the early stage of the recruitment process or selection process only, it has already created a favorite, a implicit favorite, or the most favorable. It feels that this specific candidate X is the most favorable to fill up the gap or fill up the position A. And now it is not that once they have decided the favorite, they are not going to look for alternatives. They are still going to search. They are still going to search for alternatives, but it would be on the basis of this specific candidate. On the basis of this specific candidate only, they are going to look for better alternatives, and when they find a better alternatives to this implicit favorite that they had created or had during the very beginning of the selection process only, then it is going to be selected. Okay, and this candidate who has been chosen as the implicit favorite candidate of the recruiter, you could say, it is also known as the confirmation candidate. Okay, confirmation candidate. Okay, and this is what we mean by the retrospective, implicit favorite, or gamesman model. All of this means the same, and it is usually used. Okay, it was given by the Soelberg. Okay, this is the thinker who came up with this model of decision making, and it is primarily used while making non-programmed decisions. This is not something which happens on a regular basis. In fact, it is completely new and unstructured. Okay, it is completely novel and unstructured, or new and unstructured. Okay, and with the example we were able to understand what this particular model of decision making means. Then let us go to the next type of decision making model, which is the garbage can model. So what do we mean by this garbage can model? So here you can understand that not all types of decision that are taken in the organization is done in the most rational or structured way. There are many decisions that could be taken arbitrarily or on the basis of limited information that is available to the manager or the decision maker at that point of time, and this type of decision making model is usually used in times of crisis. In times of crisis, or when decision needs to be taken very quickly in a fast paced environment, the decision needs to be taken. And what this garbage can model basically means, or what it assumes that all the things, it is the problems, solutions, choices, players, opportunity, all of them, they are present in the they're present together just like in a garbage can, and they are moving in the garbage can randomly. They are moving in the garbage can randomly, and in case or at any point of time, if they happen to intersect, if they happen to connect in some or the other way, then the decision is taken. Okay, so you can see here that it is not a sequential or methodological. Okay, it doesn't have any sequence or a particular structure in which the decision is taken. Instead, you can say that, let us say there is a time of crisis and there is limited information. Okay, there is limited information, so whatever information is existing and whatever problems are there which we need to solve, the solutions, all of them are existing together, and in a random way, whatever the manager feels is the right thing to do at that point of time, they take the decision. Okay, this is what we mean by the garbage can model. This is what we mean by the garbage can model, and it does not have any logical step-by-step methods. Okay, it is completely random. Then we have the intuitive decision making. So usually whatever decisions are taken by the manager or any individual, it is usually on the basis of past experience. On the basis of past experience, because problems, they continuously happen over the years. So on the basis of how this was solved in the earlier times, on the basis of that only solutions are taken up. But the intuitive decision making here is when the manager are faced with problems which are completely new. They have not happened earlier and they do not have really a complete precise idea regarding the problem and how to take a decision to solve the problem. And there are also, in this particular situation, you might say that the manager or the individual is required to take quick decision. With quick thinking, they are required to take a quick decision. So here what they are going to focus on or what they are going to depend on is their intuition or their hunch, whatever they feel is right. It is not the most rational way to take a decision, but yes, in this intuitive decision making model, it is on the basis of their hunch or on the basis of their intuition that they decide this would be the best solution to the given problem. Okay, this is the intuitive decision making model. Okay. Okay. Now let us see the various steps in decision making. So you can see here, first is problem identification, then we have immersion, then we have incubation. Questions regarding incubation has already been asked in the examination. Okay, question regarding incubation has been already asked. Then we have the eureka movements, which is also known as illumination, step, and then we have at last the finalization and action. Okay, so now let us see one by one what all of these steps in decision making mean. So the first is problem identification. So first of all, certainly we need to identify what we are going to decide on, what solution we are going to find. It is on the basis of the specific problem that needs to be identified. So that is certainly the first step of decision making process, that we need to identify the specific problem. Then we have the step of immersion. And in this step of decision making, all the information, the decision maker, they are going to gather all the information. They are going to also analyze all the information. They are not going to take a decision at this step, but they are going to get access to every single information that they could access to take the right decision, right? And then we have the incubation. The step of incubation. And what happens in this step of incubation or stage of incubation? The manager or the decision maker, they do not think about the problem. They separate themselves from the decision making problems, and they do not think about what is the problem and what decision needs to be taken, though subconsciously it might be running in their mind, but actively they are not looking for a solution. And then we have the illumination, which was also we just discussed here was the eureka movements. So here in this specific movements, when it is least expected, okay, when it is least expected, we get some sort of insight to the problem and we are able to find a solution to the given problem. And at last, after we have after the step of illumination, when we have already made up our mind that this specific solution would work out to solve the problem, then would come the verification and application. So we need to verify if the solution that we found out is the most feasible solution, it could be applied properly. We need to verify the same and then we can apply the same solution or the process of solution to solve the problem that we have identified. Okay. So these are the various steps in the decision making, 5 steps in creative decision making. Okay, 5 steps in creative decision making process. Okay, so we are learning various in this document only we have learned various types of decision making, various steps of decision making. So have an idea, okay, have an idea regarding this various decision making process. But the most important is this terms, right? You should be aware that these different terms, immersion, incubation, eureka movement, what those specific steps mean. It is important for you to understand it. Okay, then we'll see common difficulty in decision making process. So what are the common difficulties that the decision maker faces during the process of decision making? First is non-actionable information. So whenever we are taking a decisions, when we are taking any sort of decision, there is one step is mostly common in all decision making processes: collecting of information, collecting of relevant information to take the decision. So there are various information which are relevant to take the decision, but at the same time there are various irrelevant information as well which might crowd the decision making process and delay the decision making. So these are known as non-actionable information. Then we have unsupporting environment. So the environment of the decision maker could be supporting or unsupporting, right? They you could see, let us see here, like the manager, they could be encouraged if they are given a proper environment with encouragement that you should take this decision. Then all the employees, they are also motivated to give their opinions in the decision making process. Also there is a positive environment, you could say, in the complete organization with respect to this decision making process. And when the supportive environment is given to the manager or the decision maker, they are more able to, or they will have more tendency to take a optimal decision. Then we have non-acceptance by subordinates. So there are various decisions which are being taken in the organizations where subordinates have a stake in the decision. Either they have a stake in the decision or they are very heavily affected by the decision that is being taken. So in these cases, it would be important that whatever decision is being taken, it is being properly accepted by the subordinates, because it would otherwise affect the implementation process of the decision making. There certainly might be cases where the subordinates are not that much affected by the decision. So here the acceptance of subordinates is not required. But in situations where they are affected, it is very much important that we gather, or the manager gathers their acceptance and their support. Okay. Then we have ineffective communication. Ineffective communication is going to be very harmful when we come to implementation process of the decision making. So what the decision has been taken, but the implementation is also important to make sure that whatever alternative has been chosen is effectively able to solve the problem. So if it is not communicated properly, if there is any sort of inefficiency in the system of communication, then the implementation becomes very difficult. So it is important that the communication should be clear, precise, and also simple in language, so it is easily understandable by the people who are implemented and the people, also the people who are going to be affected by the same. Then we have incorrect timing. Then we have incorrect timing. So we usually believe that the optimal decision is just a decision making process and it could be taken at any time and it could be implemented at any time, but this is not completely correct. Rather, it is important that whatever decisions we are taking, it is implemented in the right time, right? For example, you can say that, let us say the company is having, or it is launching some advertisement to increase its sales. So it cannot just launch this advertisement at any random period of time. Rather, they have to strategize at what point of time they will come up with this advertisement so that it will shoot up their sales or shoot up the sales of their product. Okay. Okay. Then we are going to see the various biases and errors that happens in the decision making process. Okay, so there are many biases that have been listed down here, and we are going to see what all of them mean, and let us get started. And it is important that to understand what these biases mean, because many questions are usually asked from this part of the syllabus or this part of the document. So first is cognitive bias. Bias is also known as psychological bias. So here what happens is, the decision maker, they take a wrong decision, or they take a irrational decision, or decision in an irrational way because of some unknown pressure that has been exerted on them. It could be because of the environment, it could be because of some pressure that has been exerted on them from their colleagues or their superiors, because of which even if they want to take a rational decision, unknowingly because of the pressure or the given situation or environment, they are unknowingly taking a irrational decision, or they are taking the decision in an irrational way. Then we have overconfidence bias. So here what happens, when the manager is overconfident about their decision making ability, they are confident or overconfident about their decision making ability, and it is because of this overconfidence that they having, it is because of that they take risky decisions. They do not access a lot of relevant information that they could have used in the decision making process, which ends up them taking various risky decisions. Okay, this is known as overconfidence bias. Then we have hindsight bias. So what this hindsight bias means? It is the tendency of individuals to see past mistakes or occurrences as obvious. So if we take an example, you can take an example. Let us say there was a cricket match, and in that India, for some unfortunate reasons, lost the match. So once India has lost the match, there would be various self-made critics who are going to come up to the media, or they are going to use social media to say that there were many mistakes that happened, that this player should have played like this, the captains should have taken this decision, and they feel that whatever mistakes had happened were very obvious and they could have been easily avoided. And this is once after they have lost the match, or after the mistakes have already been made. Okay, this is known as hindsight bias. Okay, this is known as hindsight bias. Then we have anchoring effect. This is when someone attaches themselves to an initial bit of information in a decision making process. You can take here, for example, let us say someone is on a venture of buying a used car, right, and the person is trying to negotiate the price of the car, the best price in which he or she can buy a specific used car. So here what happens in the selection process of the used car or the negotiation process, the buyer, on the basis of the first or initial price of a specific car that it had seen in its initial period of searching, that becomes a basis on which it negotiates the price of car when it is continuing its search for buying a used car. Okay, for example, let us say it saw a specific car that one of the negotiations, the initial negotiations, it was 1 lakh rupees. So on the basis of that, it is going to negotiate further when it is continuing its search for a new or for a used car. Okay, then we have the framing bias. So here framing bias is an individual's response to how a situation or decision is presented. So it is not just about the decision being taken, it is also about how it is presented. For example, let us say there is a chips packet. Okay, there is a chips packet, and in one of the chips packet it is given that it is having only 5% fat, that it is only having 5% fat. In another chips packet it is given that it is 95% fat free. The same thing is only written on both of these packets, but you can understand that this packet is going to attract the consumers more than this one. So here the decision has been taken, the decision of what should be the ingredient or constituent of the chips is same in both of the products, but how it is presented is going to affect its sale in the market. Okay, this is known as framing bias. This is known as framing bias. Then we have escalation of commitment. And this is the tendency of individual to continue to follow what has proven to be negative or unproductive course of action. So here you can take for example, let us say a company, it started a project A. And it has been working on the project since last 2 years, but this project is showing a return of investment or a profit of only 20%, but they have already worked on it for 2 years. They have used a lot of resources, lot of investment to make this project happen. So here, instead of closing down or shutting down this project only because they are aware that this project is not the most productive thing that they are doing for the company, they are aware about that, but since there have been so many resources which has been used, and because also the manager is not in a position to accept that the decision which has been taken by him or her was wrong, or because of this reason they keep on continuing the same project. Instead of completely shutting it down, they are going to try resolve any sort of issues and keep on continuing the project instead of discontinuing it. This is known as escalation of commitment. Then we have immediate gratification. So what does this mean? It is a tendency to make the immediacy of a potential solution to a problem or situation the most important criteria. So whatever solution is available immediately is put into use instead of looking for all alternatives. So here you can take a very standard example, that is snoozing of alarm, right? Whenever the alarm goes off every morning, instead of waking up, there are many people who feel the immediate solution to this alarm is to simply snooze it. So this is something you could say is an example of immediate gratification. Okay, this is a common example. From the business perspective, you can understand that whatever solution is immediately available to them, they will go for it instead of looking for all the alternatives. Then we have selective perception. That is the tendency to see a particular situation or issue from a chosen perspective, and this is also related to team-based mentality. So here you can take for example a teacher in its class. From the very beginning only, she or he has marked that this specific person A is a good student. They are showing many positive traits, and they believe, or the teacher believes, that this person or this student A is going to score well in the examinations. This is a perception that the teacher has created from the very beginning, and at the same time also the teacher has created a perception that this student B is a bad student and it is most probably not going to score more or going to score less in the examinations that are going to happen. So on the basis of this perception only, that the teacher has created for various students, not just A and B, for many students in the class, on the basis of that only they are going to judge the students during the entire session or the entire year. This is known as selective perception, and this selective perception or the initial perception that they have created for specific things, that is going to influence all the decision that they are going to take further in the year. Okay, this is known as selective perception. Okay, then we have confirmation bias. This is something we learnt last class yesterday, confirmation bias. So here the manager, they have already they have a preconceived notion, or they have pre-decided that this would be the solution, this X would be the best solution for the given problem. So here what they are going to do, they are going to accept, or they are going to actively look for all the information that is going to support their decision, and they are also going to screen out any sort of information which is not supporting their decision. This is known as confirmation bias. Then we have the availability bias. And what we mean by this availability bias? The availability bias means that there is a focus that is made on immediate information or situation that comes in mind, instead of looking for all the alternatives. So here you can take for example, recently there was a very deadly or dreadful train accident that happened, right? There was a very dreadful train accident that happened in Odisha, right? Because of which there were many pictures circulated, right? Many information which was circulated because of how painful it was, how disturbing it was. So on the basis of this information, or you could say not the specific train accident, any accident for that matter, specific information or vivid images are usually circulated in the media, and this specific information that is accessed by the consumers, on the basis of this specific small bits of information, they might create a fear for traveling in trains. But this is not the complete information. Yes, the accident happened, it was very dreadful, but after that there was also, it has been repaired, and there are many people who are ensuring the safety of the trains. But usually this specific small bits of information which are very frequently shown to the public, it affects the way they are going to see their train travel. This is known as availability bias. Then we have representation bias. And this you can understand, or this is somehow related to stereotyping. So here on the basis of stereotypes that we have existing in our mind, it affects the decision that are being taken. For example, like you could say that girls are weak in math, and in Western concept that all blacks are criminals. These are stereotypes that are existing. It is not correct, but these are stereotypes that are existing which usually affects decision making, right? You could say maybe in a recruitment process, if it is related to STEM or it is related to science, they might prefer a boy over a girl, with not because of much rationality, but only because they have the stereotype in their mind that a male person or a boy is more productive or would be more effective in a field of science, which is not necessarily true. So this is known as representative bias. Representative bias, and it is the tendency to believe a situation is indicative of greater tendency. Just because they saw that 1 or 3 people or 1 or 3 girls were not good in maths, they have assumed that all the girls on the face of earth are not good in maths. Then we have randomness bias. That is the tendency to see a pattern in otherwise random data or information. For example, you can take here lucky charms, you can take here, okay, for lucky charms. So many people, let us say you are wearing a specific shirt, and whenever you are wearing that specific shirt or specific pair of shoes, you are scoring very well in your examination. So it is very random. It is not exactly that because you are wearing that specific shirt you are scoring well, but in your mind somewhere you believe that this is your lucky shirt and you should, whenever you will wear this, you are going to get good marks. But this is a very random type of decision, right? So this is known as randomness bias. So this random information, from this random information you want to extract the information and take a decision because it feels right, though it might not be the most rational decision that you are taking. Then we have self-serving bias. So what does this mean by self-serving bias? So here you attribute positive results to your own self and negative result to others. So for example, you can say that whenever, let us say, someone cleared an examination They are going to say that I cleared the examination because I worked hard, I studied late night, and I did all of this stuff which made it possible for me to clear the examination. And when someone is, or the same person is not able to clear the examination, they will say that it is because of I did not have access to a lot of facilities that the people who cleared the examination had. So this is just an example, okay, that usually people attribute success to their own self and failure to others. That is known as self-serving bias. Then we have the fundamental attribution error. That is overemphasizing personality-based explanation for behavior of others that is observed in others, and underemphasizing the role and power of the situational influences on the same behavior. So here you can take an example. Let us say an employee has come late to the office. So the manager says that he is coming late to the office because he is lazy. But when the same thing is being done by the manager, that the manager is late, he says that it is because of this problem that happened that I was late. It is not because I was lazy, but because of some problems that I had, right? So here basically you can understand that whatever behavior the specific employee is showing, it is being attributed to a specific personality that they believe they have, that this employee is lazy. But when the same thing is going to happen to the manager their own self, they are having excuse for the same. It is not because of their personality, but because of some situational issues that happened. Then we have the rationalization. Okay, then we have the rationalization bias, that is constructing a logical justification for a decision that was arrived through a non-rational decision process. So let us say some decision has been already taken, but it was not a structured decision taken on the basis of various relevant information, but it was taken randomly and it somehow worked out. And after it has worked out, the manager is going to come with an explanation or a structured logical justification why the decision was taken. So it is rationalizing a irrational decision or a decision that had been taken in a irrational way. Then we have a bandwagon effect, which is the tendency to do or believe things because many other people do the same thing. So here you can take for example buying of trendy products, buying of trendy clothes, iPhone and all of that, because simply because all of them are doing it, we'll believe that that is the right thing to do and we will also do it or buy the product. That is known as bandwagon effect. Then we have the status quo bias. So it is the tendency of people to like things to stay relatively the same. So instead of going for any dramatic change, whatever is happening, they want it to happen in the same way or continue it to happen in the same way. For example, you can take that when you are going to a restaurant, instead of trying out new dishes or instead of taking the risk to try out new dishes, you usually go with your comfort order that you regularly do in the restaurant. Then we have the illusion of control. So what it means, tendency for human beings to believe that they can control or at least influence the outcomes which they clearly cannot. So here you can take for example, like people are ready to pay more for lottery tickets. They are ready to pay more for lottery tickets if they are given a chance to choose their numbers, even if that may not be increasing any of their chances of winning the lottery. Just because they can choose the number, they are ready to give more money for the same because they are getting an illusion of control, right? This is known as illusion of control. Then we have the prudence trap. Then we have the prudence trap, that is when faced with high stake decisions, we adjust our estimates or forecast to be on the safe side. So here you can take for example a defense missile or any sort of defense missile or equipment is being designed. So this is a very high stake decision of that this missile needs to work. So they are going to test it in the worst case scenario. In the worst case scenario, they are going to test it out to be on the safe side, so that this defense missile, it is going to work out in every single situation. Okay, then we have the recallability trap. Then we have the recallability trap, that is giving undue weight to recent and dramatic events. So the recent events, that what has happened, on the basis of that we take the decision instead of going back just recently whatever has happened. On the basis of that we are going to take decision, or we are going to give a very high weightage to this recent events that has happened. Then we have the sunk cost fallacy or bias. So this is something we already learned, that this means whatever past choices, okay, let us say that the company A, it has taken up a project but it is not working out, but there are a lot of resources that has been used on it, but it is showing very low profit of 20% only. But since a lot of resources has already been spent on this project A, the company or the manager is not discontinuing it and instead continuing it and trying to find solution to any way continue this process, even if continuing the project is not the most rational decision that needs to be taken, but simply because it does not want to accept, the manager does not want to accept that this was a wrong decision that has been taken, and it keeps on continuing the project. That is known as sunk cost fallacy or bias. Then we have loss aversion. So loss aversion is when the people have tendency to strongly prefer avoiding losses, okay, than acquiring gains. So they are not going to take very risky decisions so that they will have high gains, but instead they are going to settle with decisions which is at least not going to give them losses. Simply they want to prevent or avoid losses. Then we have the survivorship bias. Okay, then we are going to have the survivorship bias and halo effect and horn effect. So survivorship bias, so here it is a type of sample selection bias that occurs when an individual mistakes a visible successful subgroup as the entire group. For example, you can take here, let us say airplane had a crash. Okay, let us say an airplane had a crash, but usually the airplanes which had a very deadly crash, these airplanes, they do not return for any sort of analysis to be done by the engineer. It is usually the airplanes which have not that badly crashed comes to the engineer for analysis. So on the basis of the airplanes which have not that badly crashed, which come to engineers, on the basis of that they are going to check that which areas of the airplanes are usually not affected by the crash, but they are not having all set of information. They are going to only have limited information on the basis of only the airplanes which came to them for analysis. So here on the basis of this limited information only, on the basis of the limited information of the survivor airplanes only, they are going to make the analysis or take the decision, because they believe that this small sample is going to represent the entire group, which is not completely correct. Okay, that is known as survivorship bias. Then we have the halo effect and horn effect. So halo effect, by halo effect we mean that the tendency for a person's positive traits to spill over from one area of their personality to others, in others' perception. So if let us say a manager, they feel that a specific employee has some positive traits. Okay, I'll be coming to your question. Okay, we'll discuss this, then I'll come to your question. So a person's positive traits. So yes, let us say a manager, they have this perception that this particular person is having some positive traits and they are perceiving the same, so they will believe that this positive traits, this person or this specific employee is also going to show in other fields of work. And similarly, this is known as halo effect, where there is a spillover of positive traits, there is a spillover of positive traits, while in horn effect, the negative traits, there is a spillover of negative traits. So let us say that someone was not able to do as good in a particular work, so the manager would believe that they are going to not do well in all other work or all other aspects of the work as well, which may not exactly be correct. Okay, so positive traits is halo effect and negative traits is horn effect. Okay, and these are the various biases, and we are going to start the group decision making techniques and individual decision making techniques in the next class. Okay, so this is up to which we are going to learn today. Okay, rationalization and intuitive decision making. So in rationalization, what happens? A random decision was taken. It was not the most structured way in which the decision was taken. It was taken randomly and it somehow worked out. Okay, it somehow worked out, and after the decision has worked out, the decision maker is going to give a rational explanation for the same, even though the decision was not taken in a rational way. Okay, this is what we mean by rationalization. And intuitive decision making, when the manager or decision maker does not have a lot of information. Okay, this specific situation or problem, it had not arisen in the previous years or in the previous part of their experience, and it is completely new to them, and they do not have a lot of information as well, and it might be a crisis situation, and decision also needs to be taken very fast or quickly. In such situations, the decision maker, they will follow their intuition. They will follow their intuition or their hunch to take the decision. Okay, so here the decision has already been taken, and the manager or the decision maker is going to give a rational explanation for the same, even if the decision was not taken in a structured or rational way. And here, since the decision maker does not have experience of the same problem in the earlier experience of the same person, it is going to focus, or it is going to depend on its intuition or hunch to take the decision. Okay. Okay, RBI taking decision, keeping the rate changes. Obviously, since the RBI, it is such a big institution, and this decision is going to hamper the entire economy of the country. It is going to take out a lot of research, a deep analysis to take a decision. So it will be a rational decision. But just like we discussed according to Simon, what Simon said, not all decisions can be completely rational. But yes, RBI must be taking or must be trying to make the most rational or the most optimal decision. Okay. Okay, and a reference book. Okay, let me, for the reference book for decision making, let me check which would be the best reference book for you, and I'll let you know. Okay, in next class I will let you know. And the PDF, this PDF would be, okay, last class I said that it would be uploaded on the Telegram, but I was wrong about that. It would be uploaded in your courses. Okay, it would be uploaded in your courses. In your NABARD course, it would be uploaded. Okay. Okay, so we are going to meet again in the next class, and the next class we would start with group decision making techniques and individual decision making techniques. And I feel that I was thinking that I would be able to cover this document in 3 classes, but it might take 4 classes as well. Okay, so in maximum 4 classes we would be able to cover the complete syllabus or the relevant part of decision making that is required from your examination point of view. Okay, so I hope all of you have a very good day. Thank you.